Hey, good morning, Chris.
Good morning, sir.
How you doing? This is
I'm
Brian Jones. I am here with professional trader and world's most interesting man, Chris Hood.
man. I
Hey,
still I still can't get used to that title because my son's 8 and he calls me boring. So I don't know, man. I don't know what's
and
exciting.
nobody's family thinks they're interesting.
No, I even think Gene Simmons gets kicked and he's got a long tongue. So I don't know.
You're
How are
looking
you,
really
man?
patriotic there, Chris. You
I
look.
am. I am. It was the only clean shirt that I could find today. COVID does make me a little lazy when it comes to picking out wardrobe attire. But I
That's
thought that I'd definitely do this north-south thing today. See how
yeah,
it's going.
yeah, repping Canada there.
Absolutely, man. We've only got about 8% of our population vaccinated. You guys are beating us. So, it's not like the hockey. I mean,
Yeah, exactly.
at
Just
least you guys can win on the vaccines. We'll win on the hockey.
so what about so let's this has been kind of crazy market for the last like February kind of played out like you said, just a little bit strange, like strange up down.
Man,
What's going on now here?
well, the big thing is today, today and tomorrow. Well, today we've got Jerome Powell who's going to speak. So hopefully he'll do something to calm down the interest rate market. A lot of these tech companies are just suffering because they can't deal with higher interest rates. So if we can get Nasdaq back on chart, it's almost got like a douse of mild Corona. It's going to get solved. He's got the medicines, but he needs to get back above some key levels, and we can see something happening there. The market can't really go up without Nasdaq. It really needs those tech stocks to fire. So hopefully that will happen. But yeah, this month, seasonally, this month is actually a bullish month. The problem is that during the week, if you start looking at history and you go through looking at Mondays to Fridays, it follows a very similar pattern, right? You sort of have a bullish Monday, sell off on a Wednesday, up Thursday, down Friday sort of thing, right? So Fridays tend to be quite dangerous in March. But for me and my guys, what we're trying to do is reposition for the end of the year, because you don't want to be holding a lot of stuff going into the fourth quarter. The third and fourth quarters of the year of a presidential election, right? So we've had the election, we've now got the appointment. That third and fourth quarter, those are tough times, man. In history, that's where a lot of pain is being felt every 4 years. So I want to try and reduce my positions.
Why is that? Do you think?
I
What's
have
the
no idea. Like we can't really tell. I mean, I don't know. I just look at the data and I go, well, it's done it for 20 years. It's probably going to happen again, just like February, right? I've
right?
I've never actually had a good February when it comes to performance. I mean, this year was profitable, but it wasn't profitable to the levels of January or December, right? So I always know that February is going to get, you're going to get kicked a little bit in Feb. Um, so it's been a bit of a hard market to trade. Yesterday was particularly dull and particularly boring.
It
But I
seems
think
to
if
grind along.
yeah, it's hard, man. This grind. It's like we're not going anywhere. It's like you're stuck on a treadmill. You'll have these big days up, and then they'll gap fill down, and then up, and then down, and then if you look at it over 2 weeks, you haven't gone anywhere. And for beginner traders and for novice guys, what you've got to do is make sure that your expiry timelines start to reduce, right? You don't want to be doing too many long dated things. So even if you bought a contract or you're doing a deal that's got 90 days on your expiry, what you really should be doing is looking to get out within 7 to 14 days. If that trade hasn't worked within 7 to 14 days, it's probably better just to put it on the side and come back later to that trade. So put it on a watch list, come back later when the signals are better or the setup is working.
What kind of trade types do you like in this sort of
In
choppy?
this market, iron condors are my favorite for income. I like to do iron condors. I'm still a fan of spreads on the bull put side, particularly if the setup is right. The thing is, I don't like to trade, oh, this market's like this, therefore this trade will work or this strategy will work. What I'll do is I'll look at the graph and I'll look at the signals and I go, you know what? In this kind of environment with volatility where it is and where this stock is relative to its ETF, the sectoral ETF and to the main market as a whole, I'm going to go with this trade. I'm going to do a long call, or I'm going to do a bull call spread or a butterfly or whatever it is. You can't, the problem a lot of guys have is their toolkits are so small. So they only really know how to do one or two types of trades. And when you've got that mindset, or you've got that limitation, you try and shoehorn these trades into a condition, right? You almost look at a graph and go, well, I only know how to do a long call, so this graph better work for a long call. Or this setup must be a long call, because that's the only reference point you have. And the error that comes in then is it might be the right graph, but the wrong trade. And, that becomes a problem for a lot of people, because they won't know how to manage it. And the problem that comes out now is that you'll end up justifying the trade. So you'll end up looking at the chart going, you know what, it's not working, but I'm going to give it the benefit of the doubt, because you have no reference to be able to change it. You don't know how to fix it. You don't know really where to go. And this is partly the issue that comes from learning yield-based strategies first, right? So if people go off and learn like naked puts, for example, if they learn naked puts as their first trade, it becomes the bias by which all trades get assessed. So naked puts have their place, and I know I'm a big critic of it, but they have their place at the right time, with the right stock, with the right setup. And you would add, I like to use them as a sort of a gravy or a sauce to a trade, rather than a trade by itself. And when you've only got that one bias, which is yield, and you start looking for trades that are going to pay you because they pay so well, I'm going to do it. That high payment is often a reflection of risk. So people forget that, but I can make $3,000 on the trade. Yeah, but you can lose 20. They have very little appreciation for what they could lose when that number is flashing in the front. So it's an interesting thing, because a lot of people aren't even aware of their win rates and how win rates mathematically affect their profitability. I was talking to some of my guys yesterday about bull put spreads, and how, when someone takes a bull put spread and they just do it and they go, oh, but I've got limited risk. I've capped my risk. If your risk reward is not linked, it's not the same, right? If you're risking $5,000 to make $1,000, all right? So let's say that that's your average setup, and you're winning 70% of the time. But when you win, you're only making $700, right? So your profit taking percentage is at 70%. For 7 trades at 70%, so you're going to make $700 times 7, you're going to make $4,900. But on the 3 trades that you lose, you're going to lose full 100%. So you're going to lose 5,000 3 times. That's 15. So you've just lost, even with a 70% win rate at a 70% profit taking, you've just lost 11 grand. And people don't realize that. They sort of overload their account with these types of trades, don't know their win rates, don't know the math, start losing when the market starts to drop like it did 2 weeks ago, when we had that bit of a decline down to the 100. And then they don't understand why they lose money. So what I say to guys is, make sure that you're risking 1-to-1. If I risk 1-to-1 with the same win rate, with the same profitability, all right, the most I can lose if I'm doing a 500 is $1,500, right? So if I can only lose 1,500 and I'm making 70%, at the time, 70% times my 700. So 7 times 0.7 times 500. I'm making 350. Okay. Every time that I win. All right. So that's my win rate. If I make 350 times by 7, I make 2450. But every time I lose, out of every 10 trades, I'm only losing 1,500. So now I've made 950, right? So
yeah, that makes sense.
So this is why the setup is more important sometimes than the trade. And if you don't understand your math, you have to learn the math, because everything in options is about math and probabilities. And if you're not trading to those, you could be on a one-way ticket to poor city, and that's what we want to try and avoid, right? So right. Understanding your math, understanding your win rates is really, really important, particularly with trades where your risk and your reward sometimes, they move out of line, right? So I say to guys, do 1-for-1s. On the right setup, a 1-for-1 bull put spread, you shouldn't be in for too long. you should be out within maybe a couple of days if the setup is right. So you need momentum on your side. You need to know that it's above a particular Keltner channel. You've got to do all of those setups, and then you can do it. Then they work. Then those trades will work. And then you need volume. You can't just do them on 2 trades. You need to have at least 10, because if you're not doing 10, your win rates aren't going to apply because you won't have enough volume to go through.
Yeah, that makes sense because, if you have a 70% chance, you have to have enough instances for that to actually play out.
Think about it like a casino. The casino wants you to play lots of hands because over a long sample size, their odds or their edge of 4% will play out.
Yeah, so they have table limits and all that stuff. So you can't
free drinks.
What's that?
The free drinks and the snacks.
Oh yeah, the free drinks cost you way more than an actual drink because you have to sit there and play and lose about, I don't know, $15-$20 before they actually bring you a drink.
The only time you're going to pay $100 for a shot of whiskey.
Yeah, you basically, it's like you will sit here and drink, and then of course after you have a few, you make some really great decisions.
Yeah, no, the mathematics of options is seldom taught to beginners. Seldom taught, because most people approach option trading as a sort of vehicle to get them out of whatever boredom they have, or whatever bad lifestyle choices they may have made before. So no one wants to talk about the hard stuff. And this is the thing that really irritates me about these ads that you see on Facebook or YouTube or whatever it is about the hack. I just get annoyed when I see it. It's like, there's no hack to hard work. People who are successful traders have done it because of time and effort and losses and learning. You can't just walk in if you've never traded before and expect to get the same results as someone who's traded for 20 years. It's not going to happen. And if people are charging you millions or thousands of dollars to learn that, or they try to convince you, I don't think it's going to work. You'll just be
you definitely need ongoing coaching, and like the emails of the not panicking and things like that. Those are always helpful, like psychologically, to when you it's having a coach that's like real time is helpful for sure.
It's really hard because when you understand why people want to do this, and then you've always got to temper these expectations. Like, this is the thing I find the hardest part about what I do, is that I want people to be successful at this, but successful over a long period of time, because anyone can find $500, 500% returns. That the trades that work out, with the 600%ers like we've done before, they don't come through snipers. They come through the setups, right? And finding those setups is just about being consistent. If I can apply the same set of rules over and over and over again, those opportunities where those suddenly, we're up 500% on whatever trade, they will happen. It's because people think that those are easy to find. Like GME. Today, there's going to be another round of pain for people on GME. Over the last couple of days, stock went up. Everyone was like, oh, maybe it's a time to buy. Down again today, 25%. This morning it's going to open up down. I'm looking to see where it is at the moment. It's hard for people to realize that this is not simple. I watched there we go. I've got it on my screen if you want me to share.
Yeah.
GME is going to open up at 194, closed yesterday at 220. Let's pull it up on a chart and see what's going on here. So this is the 5-minute chart of GME. This is just like, I just don't touch this stuff. I will not play with it. There was the close. Let's have a look. Here was the close yesterday over here. Here's the open. Seems to be moving up a bit. I just won't play this game. I don't think it's worth any of the mental aggravation that comes with trading a stock like this. It's just there's nothing real here at all. So I don't play in this, but this is a lot of pain for people who bought yesterday. This is crazy, like absolutely crazy. Don't play in the space. But there's some nice trades on at the moment. We've got a trade on Macy's that's up 600% in just over a week. I mean, you know, I've traded Macy's a couple of times already this year for, you know, up to 1,000% return the one time. It's a really nice stock to trade when the setup is right. So we've had a couple of wins this last few days that have been pretty good.
What are you looking at today?
I have a couple of things actually. This for an intraday trade. If anyone's watching this today, I like the setup that we have here on pets. I don't even know what they do. I just look at this. I look at this movement here. So one of the things I like to do on day trades is trade when they have these reversion trades, right? So ultimately, what we're looking for. Look at this volume spike yesterday. We have a small squeeze that's starting to fire off long. We've got momentum on our side. We're just below this daily cloud.
Is this the 5-minute chart?
This is the 5-minute chart, okay. Yeah. So we're just below this cloud. And what I'm looking for is for pets. Let me get the name right. I'm looking for pets to get above this purple line, which is the VWAP, the volume average weighted price. Once it gets above there, the option that I was looking to buy is this one here, just this one strike out of the money, 25 cents, you know, lots of open interest here. Market's expecting a move of 2.9. That puts this thing around 30, you know, just under $40. I would say it's going to be close to 40. So I'm looking for a move today. This could possibly be a double, maybe even a triple, if we get in right. So that's one I'm looking at today. But I want to see a continuation of this volume, and I want to see the price. I want to see the price move above this purple dotted line and maybe just above the cloud. If I can get it just onto this side here, so I'd probably get into this trade around 36.81. If I can get above 36.81, and I'll look to exit somewhere around 37.27, somewhere around there. That's one I'm looking at. Another one I'm looking at is NXPI. Now we have already got a bull put spread in this trade. So NXPI, we've got a bull put spread, fairly strong momentum, and there has been quite a long momentum over the last couple of days as well. There was this boost that we had, and it's sort of been sitting here in this green channel for quite a few hours already. Trades up here in the upper band. So I'm looking this trade on NXPI. We've already got a 35% profit on our put spread. So I'm not looking to do more on it, but that's something that I might go in, out, in, out. And then looking at what else we've got here. Let's have a look. Dish was another one. We did a trade on Dish a few days ago. So Dish, we bought some options. When did we do this? We did this one on the 4th, which is about 12 days ago. We bought the 30 call stock. The trade is up 60% since we did it. If we look at the chart on Dish, all right. So Dish trading nicely. This is the 5-minute. Let's have a look at the 1-hour chart. We've been holding this for quite a few days, so I'm not going to use the 5-minute chart so much on this one. You can see it trading in this really nice channel up here above the blue line. We're trading between the 2nd Keltner and the 3rd. There's our VWAP cloud that I'm looking for. If this price can get up here to around 39.40, somewhere around there, I'll probably look to exit and roll the trade. So there's been a couple of good ones. I'm looking at a put spread on this trade. So don't know what these guys do, but I like the setup. And one of the my favorite setups are these. If you look at the squeeze at the bottom here, it's this conversion from downward momentum into less downward momentum to bullish, right? So this is what we call a slingshot. It's not a very deep slingshot, right? So often what you'll see is that. It's sort of like a smiling face. Bye, see you later. A smiling face here. And when we start seeing this blue momentum starting to fire, we want to see this red dot disappear and turn into a green dot. All right. So when it turns into a green dot, we know that it's firing. right? So the compression can still be there, even though momentum is moving to the other side, right? So this type of setup for me is pretty good. Stock is trading right on the VWAP line. I'm looking to do a bull put spread, probably out here for 4 and 3, right? This is a weed company. So I'm pretty keen on this. Here's a 4 to 3, a 4 and 3 short bull put spread. And if you look at this, this is what I was talking about in terms of risk and reward. So if we go out here and we do a 10 contract, right? I'm risking $500 to make 430. So for me, that's almost the one-to-one that I'm looking for on a bull put spread. And I've got this setup that I like, which is this momentum starting to shift. So as this price moves up, I have an indicator here that tells me this is a slingshot. So as this price moves up, that bull put spread starts to erode. I can close out, take my profits off the table. So that's what I'm looking for at this point.
Where do you take profits on these shorter term trades like this?
On a bull put spread. So
yeah.
Generally, I'll look to take profits at around 70%, because remember, with a bull put spread, you've already made max profit when you open the trade, right? We get paid 100% of our max gain up front. And it's really a question of how much am I willing to give back. So on a trade like this, with momentum firing like this, we could probably expect between 4 and 6 bars. So by the end of the day, if this fires long, by the end of the day, we might be coming into a cycle of downward momentum. So by the end of the day, I might be out of this trade, depending on the price that I get in. But because of the bull put spread, it's a little bit more forgiving, right? Because I've got time on my side. As long as the trade stays above my short, I'm going to make 100%. So if I do the 4 and the 3, 4, I'd need the price to stay above this line. All right, so I've got this Keltner, plus the VWAP to stay as sort of protection for me. Mm-hmm. So if I do the 4 and the 3, my risk is down here. And as long as the price stays up here and it goes that way, I'm pretty much okay on the trade. So I'm not too worried about this trade if I did it and I had to hold it for a couple of days. I think that this momentum will probably carry through. See, it's changed color already. Now it's gone yellow, but it's a lower yellow than this one, right? So there's less downward momentum. I'm looking for this to go long on the blue side. So price has now dropped below. Let me change this to the 1 minute chart and see what's going on. So if I look at the 1 minute chart, you can see what's happened on the 1 minute. Right now it's firing short. So this might not land up being a trade for me because this is now below the VWAP. I need it above the cloud. So if this can get above the cloud, then there's a trade. Now, see, there's volume coming in. Price has changed. It's holding this level right here on the cloud, bottom of this VWAP cloud. I need the price above this green line before I'll go into the trade. So that's something I'm watching this morning. Another one.
How much? What percentage do you think? Do you do more day trading in these markets, the choppier markets, or less?
If the market gets choppy, I don't stop doing longer dated trades. I just change my expectation of the trade. So if I'm doing something that's got a 90-day expiry, I'll probably be out of it within 13, 14 days. I try not to hold too many trades into these longer dated expiries, particularly when it's choppy, because the chop can kill long dated trades, and it makes it very difficult for those trades to recover because you run out of time. So yeah, I add them in. I always look at my plan though. If my weekly plan, if I haven't hit my number and it's coming up to Wednesday, for example, if I haven't hit my weekly goal by Wednesday, I start looking for trades that are quick, short, high probability, high profitability, high probability, to get me to my goal by Friday. But usually how it works is by Wednesday, I've hit my goal. Thursdays and Fridays, I tend to call them the lottery, right? So if I've hit my goal by Wednesday, I will throw on a couple of trades for Friday, very short duration. These are micro cost in terms of options, right? They're going to cost me like 8 cents, 10 cents. If I can get a 10-cent option to go to 40 or 50 cents, that's nice money. for that. But there's a key. If you're doing day trading, you have to accept one thing, and that's a 100% loss on the trade, especially if you're using options. So you don't size these things big. You're putting in $200-300 on a trade, and you're making $400 to $500 on the trade. That's perfect. But I'm not putting in $5,000 to make 20 and then losing 5. I don't want to do that. So I keep these things small. I'm pretty consistent with that. But during these times, I only trade the setup. If there's a setup to be traded, I'll trade it. I'm not going to force myself to go and find things, because as soon as you start forcing yourself to find things, your bias comes out, and then you suddenly, this trade looks like this, and I'm going to do it because I don't want to be wrong, and that's a big problem for some people. You can see what's happening is the squeeze is starting to fire short. But this is the 1 minute chart, right? So I'm not too worried about what's going to happen in the next couple of minutes. But what we will know is that the price will probably start to go down, and then it will come back up. So you got to keep your eye on these things and see when the opportunity is. But you don't buy now. You have to buy when it's in your favor, right? The edge will be in my favor when the price is above this pink line and above the green line. So once it's about here, 445, you can see it's not far away, 442, 441. Once it's at 445, then I will probably look to buy the trade. Maybe shares. I don't know if I'll do the option. Maybe I'll just buy some shares and trade the stock.
On the bull put spread, let me get back to that for a second.
Yeah.
I know you did the webinar on that the other day about managing those trades, and I was just curious about having different profit-taking targets depending on what is going on. So if you're up and it's riding really, really, really close to the short strike, then do you have a tendency to look at the signals and exit them at different times instead of just holding until 70? Or
there's the one thing that I'm a big believer in choppy markets is the final 30% of profits hard work. So sometimes just getting out, particularly now, is I don't like holding same week expiry put options past Thursday. So I will look to get out on a Thursday. I don't want to hold them on a Friday now, especially if I'm at the sort of 60 to 65% profit taking or 60 to 70% profit level. The reason is this: the likelihood of a sell-off on a Friday in March is very high. And if I've gone into a trade that's close to the short strike, I'm at 70% profit, and I've gone in with the mindset of, see, now I'm getting a buy signal. There's my buy signal. 1, 2. So right now, I've got to start, I'd be watching this, right? So this is trading in the pre-market. So, we'll see where the price goes. But
you're like an owl just sitting and it sees a moving creature.
Yeah.
Now you're ready to pounce.
So the thing that I will do is I'll probably exit bull put spreads mainly on Thursdays and not hold them onto Friday.
Even if you have a quite
on Friday. What's that?
Is that the case even if, let's say, you've got a 40% gain? Would you rather just take the 40% gain and then get out? Or
yeah, you know what? Most times, yes. In March, yes. Because I don't want the risk of a full loss on a Friday. So sometimes taking the 40 and taking the W for the 40 is a little safer than holding it overnight and taking an L the next day. So a lot will depend on your plan and how far away you are from your goal, right? So if you're not close to your goal and you look at the charts and the charts are indicating downward price pressure and you're close to the short strike, I would get out. But if it's showing upward price momentum and there's a likelihood that the price will be higher tomorrow anyway and you're far away from the short, hold it for the extra theta decay. But it's all about being practical. It's like there's no real hard and fast rule. One's right, one's wrong. It's about looking at your own plan and going, well, I want my plan to achieve a certain result. This is how I'm going to do it. And if it means you take a couple bull put spreads at 40% profit, take it. Rather take the W. I would rather take the W than the L, especially in March. So, I don't want to be getting to the, getting into a habit of seeing my bull put spread win rate drop because I was greedy on a Thursday. You know what I mean? It's like your win rates are really important because your win rates will determine how much risk you're going to take. And, a lot of people don't realize the math of this. If you're over risking, if your risk reward on a bull put spread is greater than 2-to-1 and your win rates are less than 70%, and, let's say that you're not winning a lot when you win, but you're losing everything when you lose, you're going to put yourself in a bad situation, just what I mentioned earlier. Mm-hmm. So rather take the win, get the 40%, and then resell the put option for the following week, the next day, if the market declines. That's the other way, because the puts premiums will spike and you get the theta decay over the weekend. So those are the little nuances that will make your put selling strategy or your put spread strategy work really well. But you've got to be diligent about it.
Agreed. So what about, are there any long dated things that you are looking at though? I mean,
I think there was a trade that came out a couple of days ago. To be honest, I know nothing about this trade, nothing about this company. I don't know what they do. Stock's going to drop off this morning, but this one I like the look of this this trade. EBON. I don't know who these guys are. If we look at the setup, it was pretty nice. All right, so here's where we are. Stock's trending up. I want to see this one get through the cloud, get back above this line. I went long in the shares. If we look at the daily, let's see. So here's the daily chart. You can see this massive spike of price here. So look, you can see it gapping up again. It's going to gap down this morning. Price will come down. But I like the setup. I like the slingshot that's coming here. I like the fact that we've got strong momentum. We've had this massive increase in volume. It'll take a little bit of time. I think we're going to see it get back to these levels. So I like this one. Big fan of what's going on in McDonald's, if you're interested to know. McDonald's looks like it's finally getting rid of its Lazarus complex. This stock was giving us a lot of pain a couple of weeks ago. I mean, you can see it's done absolutely sweet nothing since.
Is this like an iron condor territory over here?
Not now, no. I think it's breaking out now to the upside.
But prior to that,
Prior to that, yeah, this would be an iron condor. You'd be looking to do, sell the put somewhere underneath the second Keltner, sell the call somewhere above the second Keltner. That would have been a pretty successful trade for about 5 months. This is November. When did we switch? We switched from being support. So if you look at these little blue dots, these are the ATR trailing stops. When the ATR trailing stop moves from being support to resistance, that's when you need to switch your strategy, right? So from here, it switched on the 28th of October. So if you were doing condors all the way from 28 October, all the way through to now, because now it's switched now down to the little blue dot. So now what was resistance has now become support. And we're firing long here on this daily low compression squeeze.
Is this ATR trailing stop, is this a proprietary thing, or is this
you can format this anywhere in most trading platforms, they'll have it. It's just the ATR trading stop. What you need to check though is the volatility quotient that you use together with your time, right? So if you're trading the option, you need to reduce it, because I don't need a 3 ATR move on a stock to tell me to get out of the option, right? The option has built-in volatility already into the product. So you need to reduce. Most people will look at a 22 and 3, 22 periods, 3 ATR move on a trailing stop. I don't like the 3 if I'm using an option, so I reduce that down to 1.5, and I look at a lower time frame. I don't use 22 days. When I'm trading the option, I don't really care what happened over here. I care what happened over here. So I'm always looking to see if I can trade it on a lower time frame, lower ATR. So usually 10 and 1.5 works for me. And it's just a signal, all right? It's not an instruction. It doesn't tell me to get in or get out. It just tells me volatility is increasing. Because I've got the option, I need to go and check the trade. And then I'll decide whether I want to stay in based on other indicators. So that's the way I look at it. But technically, you want to be long when this ATR trailing stop at the top here suddenly switches. So now that it's switched to being support rather than resistance, this is an entry sign to go long. Plus, I'm above the cloud. I've got a position in already here. So, you know, the thing that I like about these trades is that they take quite a while to materialize. You know, so I've got some trades that are quick, some trades that take a long time to materialize. These are the ones that are taking the equivalent of stock. So you just buy, set it up right, and let time work for you.
You like keeping a mix of trade durations?
Yeah. I like having a variety. I don't like just focusing on one time dimension, because if you get whacked like we got whacked last month, you lose a lot. Yeah, so I try and stagger it across time. So I've got quite a few trades. I've got about 16 or 17 trades for this week. I've got about 22 trades for next month, and I've got about 50 for the following 6 months to 2 years. So, you know, you build them as the setup comes in. You build these trades. You know, I've got a lot of stuff around the crypto environment that's playing out, right? So we've got trades in Mara. Marathon does Bitcoin mining. This is a longer term trade. It's a risk-free trade for us. So we've already taken our capital off the table here on this trade. What have we got on here? Yeah, we're up 85% in total here. So we just, you know, we stay in this trade. Really nice trend forming, nice slingshot that we have here. Buy signal, strong momentum. Stay in the trade. You know, there's no reason to get out of it. Canaan is another one. These guys do Bitcoin mining equipment in China. Like, who would have thought? I didn't know. I didn't even know what they did until a couple of days ago. I just liked the graph. So this one trading really strongly in this between the second and third Keltner channel. You know, a little bit of a sell signal here, slightly overbought, but strong momentum. You know, it's declining a little bit down here, but I like to see this moving up. So I'm just sticking with this one. This is also a risk-free trade for us. The other one is RIOT.
I think the idea of Bitcoin mining equipment is, like, considering it's all computer-based.
Yeah.
I don't get it. I don't understand. I'm an old dude.
Man, I don't even understand these things. I look at it and I go, well, I'm never going to own one. I'll just own I'll own shares in the company that does it.
But someday I'm going to figure out the crypto wallet and just go ahead and figure out how to use this stuff. So, but I don't know.
Did you see there's a guy that paid for pizza with Bitcoin?
I've seen the vending machines and things take Bitcoin now. There's a lot of restaurants and stuff.
Well, this guy bought pizzas a couple of years ago with Bitcoin. I can't remember. I read about it yesterday. They have in the Bitcoin in world, they've got some sort of celebratory day. They call it Pizza Day or something like this on the day that this guy bought pizzas with his Bitcoin. And it turned out that his Bitcoin would have been worth like 600 million or something like that he paid for 2 pizzas. Something ridiculous. I get the numbers wrong, but the whole idea was, I think the problem that I've got with this, here's the big issue. In India, I read yesterday that in India, the central bank and the government there are going to be putting in restrictions on trading of cryptocurrencies, owning cryptocurrencies and all of that. We have to remember this. The governments of the world can change the rules when they want. And the thing that worries me about this stuff is it's quite speculative and it's a little bit of a mania. So I'm always nervous to chase things when everything's already there, right? So I would be cautious about going long. I wouldn't say don't do it, but just be cautious, because if the government changed the rules, you know, what would you do if suddenly the US government outlawed cryptocurrency trading and they've sort of banned your ability to hold it? And don't say it can't happen, because they did confiscate gold back in the day, right? So they can do whatever they want. And that's what worries me about this stuff, is that its existence depends on a sort of laissez-faire kind of approach by the government. You know, if the government just leaves everyone alone, this thing will flourish. But if they decide to change the rules, what do we do? And that's what scares me the most. I'm not smart enough to work out what to do in that case. So I like this trade as well. We've got a covered call on this trade with a long call as well. So we've made quite a bit of money here, risk-free, nice trend. I want to see this get back above this line. We've got a buy signal here. So I would stay long crypto, and I would be looking for technology stocks to make a bit of a rebound. So the one that I do like is SOXL. So semiconductors, if Mr. Powell today does the right thing and starts to fix the interest rate problem, we might see a reversion on semiconductors. So SOXL is the trade that I like. I call these things life-changing. So if you follow SOXL, I did one trade on it yesterday. I just bought one option. August 32, it's up 5%. The stock's going to open up again this morning. You know, you buy these not for the short-term gains. You buy these for when this SOXL suddenly starts trading again at $100. You know, that's what I'm looking for. So worth having a look if you're interested in the reversion trade on semiconductors. This is the stock to use because it will turn around. At some point, it has to turn around.
So this is one of your longer dated trades that you like.
Yeah. Yeah, I like this one for, at least the next 6 months, because at some point the money's going to go back out of Boeing and Goldman's and back into, the semiconductor chips, right? That's where the money's going to go back to.
Do you still like ITB? Oh,
I do. I like home builders. I think with the home builders one, sorry, you'll start seeing a lot of flashing lights now. ITB, I still like. So we've been in this trade for a while. I think that there'll be a continued run for these guys. So,
that's
I would
good.
keep holding this one. Yep, firing long.
I'm in that trade, so that's good that you think that.
Yeah, I like this one.
Well, Chris, I'm gonna let you get on with your day there and get your trading going.
Thank you, my friend. Always good to see you. I'm glad your nose is healed.
Yeah, thank you. Hopefully I won't get it smashed again tonight, so we'll see.
Payback.
Hey man, good luck today and have a great day.
I'll see you soon. Take care.
Take care.
Ciao, man. Bye.